Ladies and gentlemen, in just 1 day and 2 hours, we will be seeing the Federal Reserve cutting interest rates most likely. Okay, 65% chance of a 50 basis point cut, 35% chance of a 25 basis point cut. A more aggressive cut, like 50 basis points, would be much more bullish, as that would match interest rates where the bond market demands them to be. We saw the Federal Reserve choose to maintain interest rates at the upper level, the high level they're at right now, even though the bond market had tanked in the last FOMC decision. So hopefully they cut quite aggressively this time to bring rates in line with the bond market. If they do not do that, if they do cut by 25 basis points, we are probably more likely to see a bearish scenario play out, and that would lead to some more uncertainty in the market. So fingers crossed for a 50 basis point cut. And I think what you'll notice is that if you look down here on the screen, the probability of a 50 basis point cut has gone from 34% to 65% in the last week. Now, in the last week, we've seen Bitcoin climb upwards from around 53K to around 61K. We've seen the S&P 500 go from being in a pretty brutal correction, right? A correction that could have taken us to a lower low after seeing a lower high from the top. And now the S&P 500 has just broken all-time highs. So it's very clear to me that the likelihood of a 50 basis point cut increasing has led to optimism in the market. So the market wants to see a 50 basis point cut. And the more a 50 basis point cut has been priced in, the more the market has risen. So ideally, we see a 50 basis point cut. That's going to give the market the best chance to continue a bull market, just broader, like on broader assets, not just crypto, but on the S&P as well, right? All assets will continue rising. We'll have a better chance of continuing to rise if we do see a 50 basis point cut. But there are some fears right now, and there's fears basically that no matter what the Federal Reserve does, we're still screwed. That's the main concern the bears have. And they're looking at data points. They're overlaying the interest rates chart in red with the S&P 500 in blue. And they're looking at what happened in the dot-com bubble and the global financial crisis when interest rates went downwards and we saw a bear market on both occasions. And they're thinking, shit, this is going to be bad either way. Now, I'm going to address those concerns today. I don't think those concerns are valid. I don't think there is an actual trend there. However, what I will say is that just because the trend is not developed yet, it doesn't mean it can't develop. And there are abnormalities this cycle, but we need to look into all of this today from step one. So I'm going to go through with you today what's going on, and I'll try and keep it as quick as possible. But yeah, 1 day left into that FOMC decision, so keep an eye on this channel and keep an eye on the FOMC data as well. Guys, before we get into the content, check out the BingX and Bitunix exchanges. These exchanges are global non-KYC, and you can get a 15% trading fee discount with my referral link down below, okay? So with my referral link, sign up, you'll get a 15% trading fee discount for life. They've never been hacked before. They're global non-KYC. Take your pick down below. Let's get into the content, right? I'm not going to focus too much on Bitcoin TA right now. This is going to be a very heavily traditional market focused video, but right now what we do know, just to recap about Bitcoin, is that we are in a descending channel formation. That is the overall macro structure. Until that channel formation breaks to the downside of the upside, there's no real change in the Bitcoin macro. We can look at something like this descending wedge on the weekly chart RSI, which is currently breaking to the upside, but that break is not confirmed. We have not seen a weekly candle close. Although that is great news, it's just not confirmed. And with the volatility coming through tomorrow from the FOMC decision, I wouldn't be trusting any of the Bitcoin charts right now. With that said, medium term looks pretty good. We had a bullish divergence on the daily chart. We had a low form here. The low was slightly higher. Clear bullish divergence. We also had a low form here at 49K, with the second low being at 52K, a clear higher low formation, which is the first step before developing an upwards trend. So that's great stuff. Right now, Bitcoin is testing some very important resistance levels. So you can see the center line of the channel itself acting as resistance over and over again. We've just broken above that, and now we're in between the bull market support band. So we're in a pretty critical position here. And with 1 day into FOMC, this very well could be a turning point for Bitcoin. If we do see a bullish FOMC release, Bitcoin could blast the upside here, enter the upper range of the channel, and start testing the broader macro resistance, which could eventually lead to a breakout and continuation of the bull market. But all of that is to be seen, right? We just need to really see what happens with FOMC first. All of this is irrelevant if we don't see a clean FOMC. And even if we do see a clean FOMC, you know, it's all probabilities. There's no guarantee that a 50 basis point cut will lead everything to go upwards, especially not in short term. But it would be much more bullish than a 25 basis point cut, that's for sure. What I can say is that I'm bullish on macro, and I will be bullish on macro until the macro structure changes. There's no reason for me to shift my macro bias when the macro structure is still intact. We're in the same structure we were in March, and that is a bullish structure, and until it breaks, I will be bullish. So I am broadly macro bullish right now, but let's get into some major concerns that people have, right? As I explained before, the bond market tanked downwards before the FOMC decision, which was indicative of the bond market basically begging the Federal Reserve to cut rates. They did not cut rates. Upon the S&P 500, upon the Federal Reserve not cutting interest rates, we saw the S&P 500 and Bitcoin decline, okay, a clear decline in the S&P 500 and Bitcoin when they decided not to cut rates. In fact, it was this one right here, which broke all structures there, pretty brutal stuff. And the same thing on Bitcoin. Bitcoin, after the Federal Reserve decided not to cut rates, tanked downwards to 49K. So it was a pretty major detrimental decision from the Federal Reserve not to cut rates. A lot of people were saying it was a controlled demolition. What I'm trying to demonstrate here is that basically Bitcoin's performance and the performance of the S&P and all risk on assets in general is directly linked to what the Federal Reserve does and how the macroeconomy looks. So it's a clear indication that whatever the Federal Reserve does, it's very, very important for assets. And that's why this decision is important. If you're just looking at Bitcoin charts over and over again and looking at patterns all the time, you're going to lose track of the broader macro, right? The macro is, right, if people are broke, they don't have money to buy assets. And that includes Bitcoin and stocks and everything and all assets, right? If people are rich, they've got plenty of surplus, they've got plenty of purchasing power, okay? They're going to have money to buy assets. So the macroeconomy affects everything. Now, luckily, the macroeconomy is priced into markets, so you don't necessarily need to dwell on it too much. But when you see big things like the FOMC decision coming up, where there's no certainty in what's going to occur, you do need to look into it quite a lot. And you do need to identify TA trends surrounding what could possibly happen with the FOMC decision. So what I'm talking about is this, right? 50 basis point cut is going to be more bullish. 25 basis point cut is going to be more bearish. Now, there's a lot of people, and that's my conclusion. It's as simple as that. 50 basis point cut demonstrates a willingness for the Federal Reserve to line up interest rates to where they need to be as per the bond market, so that markets and assets in general can continue rising. If they don't do that, there is evidence that they are forcing a bear market, forcing bearishness. Okay, it's very, very clear. But there is a deeper argument that a lot of bears are making. People are saying, and in red you have the interest rates chart, in blue you have the S&P 500. People are saying right now that in the dot-com bubble, interest rates drop, it led to a bear market. In the global financial crisis, interest rates drop, it led to a bear market as well. That is the argument right now. So then the question is, well, is this whole thing a trap? The question is, does it even matter what happens tomorrow? Will the market just go down regardless? Is the market screwed? I don't think so. I don't think it's that simple. And I'll tell you why, okay? Well, first and foremost, outside of this argument, there is a threat with unemployment. That's a serious threat. But right now, again, one of the reasons the market's risen in the last couple of weeks or the last week is because unemployment has ticked downwards a little bit. And that kind of, is not really meant to happen when you're seeing parabolic swoops to the upside. So generally speaking, the unemployment rate generally bottoms out and it spikes to the upside. We haven't seen the start of a spike yet, and hopefully this tick downwards is the beginning of a larger downtrend that eventually avoids the spike from occurring or delays it until late next year as per regular cycle theory. But that's a completely separate topic. I really want to get into this interest rates chart, right? So people are saying the last two times, minus 2019, the S&P 500 went downwards. It was because of rate cuts. Now, that is simply incorrect. And the amount of people who are saying that is baffling to me. First and foremost, you shouldn't be ignoring 2019, right? 2019 rates cut, the market continued to the upside. Every other time before the year 2000, when rates were cut, the market continued to the upside. There is no established trend that interest rate cuts lead to bear markets. It only happened on two separate occurrences, one here in 2000 and one here in 2008. It has not happened on the most recent data point. We know, for example, that 3 data points is needed for a mathematical trend, okay? So 2 data points doesn't cut it. And we know even if there was a mathematical trend there, the fact that on all other occurrences, okay, back here before 2000 and the most recent data point, it did not occur. We did not see a bear market upon interest rates cuts. Rarely puts the logic of these people who are claiming this into question. I mean, I don't know what they're thinking here. Another argument I'll give is that, the S&P 500 and markets in general right now are doing something very, very unique. Right, this was the first time, or from 2021 to 2022, it was the first time ever that we saw interest rates being risen during a bear market on assets. We'd never ever seen that before. And so right now we're in a completely unique market environment because the market is very, very high at the peak of interest rates, which again, doesn't generally happen, right? And again, going back to what I said, first time ever we saw an interest rate adding cycle rate, an increase in interest rates during a bear market in the S&P 500. So very, very weird price action in regards to what we saw with the S&P and the interest rates, and very, very weird interest rates decisions from the Federal Reserve. The point is we're in a unique market environment right now, given where rates are positioned in relation to the S&P 500 price action. Even if there was a macro trend, which there is not because there's only 2 data points there. So first of all, there's not a macro trend that says rate cuts lead to bear markets. But second of all, even if there was a macro trend that says rate cuts lead to bear markets, right now we are in a unique market environment that we've never seen before due to the reactions due to how the Federal Reserve reacted to a bear market on the S&P, amongst other things, and therefore those macro trends would not apply. So what I'm saying to you right now is that we cannot make predictions based on the historical data, and the historical data is actually not even relevant for us to make predictions in the first place. So we really are in the dark here, right? And this is why I go back to what I said before. The only thing I know, and the only thing anyone knows right now, is that we don't really know what's going to happen, but we do have the established macro trends, the 4-year cycle, the 18.6-year real estate economic cycle, the election cycle theories that say we top out next year. It's not next year yet. Therefore, the cycles say we continue upwards. And what we do know as well is that the bond market is begging the Federal Reserve to cut interest rates by 50 basis points, so that if we do see a 50 basis point cut, that would demonstrate normality, right, in the Federal Reserve's actions, which we have not seen for the last few years, which could indicate assets continue to rise until the regular cyclical tops at the end of next year. So we don't really know. We're still in the dark. There's still a plague of uncertainty. What's going on with unemployment is concerning, but our best bet here is a 50 basis point cut. And I'm not going to sit here and say what the bears are saying, oh, it's all over, everything's screwed, doesn't matter what happens, because I don't think it's true, and I don't think there's data to support it. I think that is just as speculative as what the bulls are saying, except the bulls have the cyclical data to support their claims, even though the cyclical data has been acting very, very strangely. So I am still in the bullish camp, I am still in the macro bullish camp, but I hope to see a 50 basis point cut tomorrow. And after we see the Federal Reserve make their decision, I will make another video updating the situation and showing you the reaction the prices had. Now, I understand this articulation today in this video has been sloppy in general. Unfortunately, I don't have time to read film, so I apologize for weird sentence deliveries. You're just gonna have to cope with it. Don't have time to read film today, but when that decision comes in, I will make a full analysis of what has occurred. I hope you understood what I said regardless. Guys, thank you for watching. I hope you enjoyed. Just before I end off the video, JS Quinn, my second channel, I released a podcast 18 hours ago on free will. If you're interested in checking out that podcast, I would highly appreciate it. I think you'll find it interesting. If you're interested in, intellectual pursuits, that's something you might be inclined to look at. Moving forward, the Bing X and Bitunix exchanges, 15% trading fee discounts with my referral links down below. I handpicked those exchanges myself. I didn't just, click on the first email I got, my partnership email. I actually picked them out. I used them for a bit. I tested them and I liked them. And I've got 15% trading fee discounts down below. So check those out with the referral links. We've also got the VIP group on Telegram. We've got a 4 times per week altcoin trading signals being posted on there with a 78.39% win rate, which you can check out the PDF. It's all transparent. So I actually share my trading wins and trading losses all in that transparent PDF document. So you can see and fact check me on that. That's 2 years of trading data, 78% win rate, 4 times a week, plus a group chat. Check that out on Telegram. And the last thing I'll mention is the Crypto Academy's Become a Trader 10-unit course, which is currently on sale. So if you're interested in that, you can learn how to trade there. You can learn market patterns, technical analysis, candlesticks, all this kind of stuff, market psychology, how to find trades, fundamental concepts about cryptocurrency markets. All of it's there in that course. So check out the website down below. Guys, thank you for watching. Hope you enjoyed, and I'll catch you tomorrow.